Hey everyone, Mr. Anderson here. I wanted to go over a few charts with you because I'm seeing a common pattern across multiple tokens, and it seems to be particularly strong with AVAX. So I'll start with that chart. And what you're seeing is the daily, and one of the first things you probably notice is the falling wedge pattern. Now, when these patterns are formed, you don't necessarily know that they're going to form into a wedge, but you're probably going to go through the most simplest tool, which is your support and resistance lines. So you can see that we have a trend and it's to the downside, and we have multiple touch points as we fall. And what we're looking for is when we finally hit some sort of horizontal support area. So in this case, it looks like it's at $32, $33. We eventually break that resistance line, and then we usually make it into support in some sort of fashion. In this case, it looks like it broke through, didn't really hit the actual falling descending line, but hit a horizontal support around 32 or $31. We'll say $32. Now, what you probably will end up doing is adjusting that support and resistance line so that it coincides with the peak. And we can continue to do this. It follows a predetermined pattern as resistance. It ends up being a resistance again. And we continue to fall. And then we end up being able to draw a support line with multiple touch points on the larger time frame. And we can continue to do this over and over and over and over again. Now, when you do this pattern over and over again without a large change in the structure of the chart, you're going to end up with a rounding bottom pattern. Now, a rounding bottom pattern is a great pattern to see because you potentially could get a cup and handle, but you don't have to. And it's generally a good long-term pattern. You're going to use this on a longer time frame chart, not necessarily on the smaller time frames, although sometimes that rounding pattern can form. And the reason why I'm pointing this out is we are potentially coming to a bottom support area in most of the strong alts where we can dollar cost average into spot positions for a low risk, high reward trade. Now, this pattern also shows a double bottom pattern with a higher low. And this pattern is a low risk, high reward trade as well. And as you can see, we also have basically a rounding bottom pattern with this low risk, high reward setup. So what other indicators can we take a look at to show that we are potentially coming to the bottom? And that would be volume. Now, if you look at your traditional volume, you can see that it has been decreasing over the last 6 months since its peak, especially on AVAX. And what I would like to see is an increase in volume that we can't see on the traditional volume indicator to show that there's a lot of more buying coming in. So we'll probably end up seeing that on the traditional volume indicator when we get more buyers in the market. And if you've been paying attention to the macroeconomic numbers, you can see that we've been having some issues with the market. We have basically taken control of inflation to a certain degree, but we have increasing unemployment. So that's part of the Federal Reserve's dual mandate in the United States. And they try to maintain proper inflation with proper employment. Now, whether they're able to actually do that or not, I think remains in question, but that is their dual mandate. And so unemployment is increasing, inflation is coming down, and we are looking at our first rate cut in the past year or so on September 17th or September 18th. With that, depending on what's going on with the market, we could also potentially eventually see quantitative easing. And there is a big case to make that quantitative easing is part of Bitcoin's long-term cycle. So anyways, the other thing that I want to show you is the visible range volume profile, which I have over here. So while we don't have the volume increase here, which we probably won't see into the latter half of this parabola or this rounding bottoming pattern, is the visible range of volume profile. So where we can't see an increase in volume or an area of support with the traditional volume indicator, we can potentially see that in this indicator over here on the right. And again, that's the visible range of volume profile. So you can see that we have an area of supply and demand. So when price is below this area, it was a supply area. It was an area of extra supply where buyers could keep on buying, but they couldn't move the price up. We eventually broke that with more buying, with a node in volume. And what ends up happening is we eventually will come back down and we'll make it support. And this is now an area of demand that coincides with the visible range volume profile nod of volume on this right hand side. So that is a good indicator of an area of demand and buying, or an area where there are buyers looking to purchase AVAX at $21, just above $21. So that is another indicator that we're coming near the bottom for this rounding bottom pattern potentially. Now, we don't know that that's going to happen that way. It might not. And there's various reasons why that might occur. Again, this is a highly volatile asset, but it has been around for a while. And for these tokens that have been around for a while that have seen a lot of attention, you're going to see better patterns. So again, we have that low risk, high reward pattern. We've come down to an area of demand. We have a volume node on the visible range volume profile. And what will probably end up happening is we'll probably be range bound down here, maybe increasing in price and demand. It depends. We're in between a range of basically $32 and $21. And we do have 4 points that show that we are potentially going in an upward channel. And you can see that we have the falling wedge that we broke out of and maintain support. So as this pattern is being built, there is another tool that we can use, and that is this tool right here. Now, this is called the Fib Speed Resistance Fan, and it's a Fibonacci tool, and you basically take it from the peak to your bottom, just like you would with a regular Fibonacci tool. And let's see here, we'll go ahead and use that so we get the exact peaks and the exact bottom here. There we go. All right, now when you look at this, you can see that we have, again, support and resistance lines. So all those lines that I individually drew in the beginning are now there for you to actually observe with an easy to use tool. So you can see that we had resistance at the 0.5, 0.5. We broke out of it. We had resistance at the 0.382, broke out of it, went through the 0.25, and we saw resistance at the 0. Now, when you initially put this tool, you're not going to be able to see these negative fib channels or fib lines because we don't have the bottom yet. So this is a tool that you have to adjust. Now I'm placing it here at the bottom because that's what we want to look at. And we want to look at everything to the right here to see where those potential new support and resistance lines are. And what you'll notice is that the 0.25 is on the exact upper resistance line, or yeah, resistance line of this falling wedge, and it's at 0.25. So it was acted as resistance in an area of demand, and we eventually broke out of it. We didn't make it to the 0.382, but we now are using it as support in conjunction with a visual range volume profile node and an area of demand. This could fail. This doesn't say that this is the bottom, because this could fail and we'll have to adjust our fib line to a lower line, and then we'll go from there. But as you can see, as I did before manually with the support and resistance lines that I was drawing by hand, you have them here as fib lines. We should be able to maintain support. The more time we maintain support above $21, the better. If we keep hitting it, then there's a chance that that may break and we may come back down. But this is a tool that you can use as price progresses, again, through the higher time frame. I'm using the daily here to see and confirm that we are potentially making a rounding bottom. And you can also take your regular fib retracement, and that may potentially give you more information. And you can see the 0.236 was acting as resistance. We actually broke through it. The 0.25 acted as resistance and it slammed us back down. When you get this middle finger pattern, it is usually a sign of indecision in the market. We're not really sure where we're going. We think maybe we had a double bottom here and we had that low risk, high reward trade. And then for whatever reason, we didn't. And this is most likely due to Bitcoin and some macroeconomic news where price ended up getting destroyed. So that's what happened here. So now we're forming that, again, that new pattern where we have the bottom, a higher low, and we have that double bottom pattern for that low risk, high reward trade. And we broke through that falling wedge pattern. So we potentially could expect some resistance on this 0.382 if we continue higher. And then we're going to have to also break through that 0.236 on the traditional fib retracement tool. And we may hang around here in the bottom, slowly increasing in this parallel channel. So that's just something to put in your tool bag. I think it's useful. And if we look at our other coins, our other strong tokens, we have that same pattern. We have that falling wedge on SUI. We have the falling wedge and breakout and retest on Beam. We have, we don't necessarily have a wedge, but we have a breakout of the resistance line, a retest, a perfect retest with the visual range volume profile node in conjunction with prior price action and an area of demand with a volume spike on the traditional volume indicator. So these are the things that you want to take a look at. And this is why I think we're close to the bottom when it comes to the alts. Now, that doesn't mean that is the actual bottom. If we have a macroeconomic news that causes damage or discovers damage in the larger macroeconomy, people are going to liquidate what they can liquidate, which includes high risk coins and tokens and Bitcoin, and they're going to put it into their bank account or wherever they need that liquidity. And if they're using leverage, well, that's what they're going to be probably using it for on other assets that they're using leverage on that they didn't expect to get liquidated. But as far as just looking at the alts, this is a fairly good and decent tool. Does that mean, you know, Bitcoin can't go lower and these can't go lower? No. I mean, yeah, that's a definite possibility. If Bitcoin's current structure fails and we drop 30%, alts are going to drop 50 to 60%. And you can really just take a look at that on the chart. And you can see, looking at Pendle, if we were to break structure, that's a 70% drop in Pendle, and it's a high risk coin. If it was AVAX, if we break structure at our area of demand and volume visual range profile node, that is an extra 37%. That's going to bring us back to the lows prior to this bull run. So anyways, that's what I wanted to show you. I think it's a good tool to use. It's very simple to use. It's helpful. And you can apply this to some of the other alts that are showing this strong pattern. I'll go ahead and show it on Beam. And you can see that this 0.25 that was acting as resistance for this falling wedge pattern became support. And now we're bouncing from it, and we'll probably zigzag down here on this area of demand, hopefully above this visual range volume profile node. And we'll probably get some resistance at the 0.382. And once we break that, that'll become support. And we should be able to create that rounding pattern. And you can place, this pattern here. You kind of can see how this pattern potentially may form. Now, we don't know how big it's going to be or how long it's going to be. That's all up in the air. If you believe that we are still on the cyclical phase of Bitcoin where we should get another parabolic rise, it should be a fairly good rounding bottom pattern and not something like this trash right here. This was terrible. This was at the end of the last cycle and the collapse of FTX, Three Arrows, and Celsius, and you name it. We didn't get that rounding pattern. This was the end of the cyclical Bitcoin phase where we just suffered for basically 2 years. So that is all I have for you. I'll take a look at each one of these coins individually and keep an eye on them. And I hope you have a great night, and I hope you find this useful. And I will see you next time. All right, thanks. Bye.